Okay, so we're delighted that you're joining us for the next instalment of CovéaPod. I am Catherine Masters, Director of Pricing and Data here at Covéa Insurance. And in today's podcast episode, we're going to be talking all about reinsurance. I'm really delighted to be joined for our talk today by our special guests, Peter Saunders, a Senior Reinsurance Pricing Actuary at AON, where he has been for just over a year. Peter has over 20 years experience in reinsurance. So Peter, thank you for joining us, and hello.
Pleasure.
Mark Wareing is our head of reinsurance here at Covéa. Hello, Mark. And Mark has also had over 20 years of experience. So I'm sure you'll agree that they are both well equipped to be discussing this important topic. So together, we're going to start from the beginning with a quick overview of what reinsurance is before we get into why it's so important and what we do here at Covéa. And we will be talking about some trends that might be impacting the reinsurer's future outlook as well. So thanks very much for our panel for joining me today. And we will get started. So Mark, I'm going to come to you first. Our listeners might not be an expert in this topic, and as we have two experts with us today, could you give us a high-level view of what reinsurance is?
Yeah, absolutely. Thank you, Catherine. Probably in its simplest form, and it's cliche as it is, but reinsurance is like insurance for an insurance company. So very much like one of our policyholders buys insurance to protect itself against large and catastrophic losses, we as an insurance company purchase reinsurance to protect ourselves against those large losses. And those large losses could come about as either because of a single event, a single loss, or as an accumulation of several smaller losses. So we buy protection to ensure that we as an organisation are financially stable going forward. Obviously, we insure lots of individual policyholders. If all of those were to have a claim at the same point in time, that would have a significant impact on our company's profitability and its balance sheet, its financial strength. So we buy reinsurance fundamentally to protect ourselves. But there's a few other reasons why we also buy reinsurance. We buy reinsurance because it allows us to manage our capital position. As an insurer, we have to hold money aside against the need to pay those claims. But by buying reinsurance, it means that actually we can perhaps deploy that capital in different places. The other reason we use reinsurance is to give us access to experts and other people's expertise. So there may be a line of business that we currently don't write and that we have no history of writing, but it's an area that we want to enter and start to explore. By partnering with a reinsurer, it allows us to both use their balance sheet, but also use their expertise and their experience to help us develop the understanding of those markets before we move into them wholly on our own.
So very necessary for us as an insurer then. Thank you for that explanation, Mark. Peter, could you just talk a little bit about what your role is as a reinsurance broker and what you're hearing from the reinsurers about some of the main challenges that maybe they're concerned about this year?
Sure. So our role as a reinsurance broker is to really help the insurers and our clients to buy reinsurance in the most effective way and the most appropriate way. So we're responsible for showing our clients in the correct light and properly representing them to reinsurers. We'll help them in their negotiations with the reinsurers, but also help the reinsurers understand what the client is about, what the client is trying to achieve, what their priorities are, and what are the key factors about the client that they should be considering when they're working out what price the reinsurers should be paying. And it's worth considering that when you buy your motor insurance, as an example, you typically just buy that from one insurance company. However, when an insurance company buys reinsurance, they'll typically buy it through what we call a subscription market. And that subscription market means that often you won't have more than 10 or 20% with a single reinsurer. So the reinsurance broker is actually not negotiating with just one reinsurance company. They're reinsuring with multiple reinsurance companies. And there are programs where you might have up to 70 reinsurers on the panel. And therefore, the reinsurance broker is responsible for going to talk to all of those reinsurance underwriters to make sure that they understand where each one of them is sitting to try and ensure as orderly a renewal as possible and as equitable a renewal as possible.
There's a lot of activity going on in the reinsurance broker market as well. And what about the main challenges that our reinsurers might be concerned about this year? What are your thoughts on that?
So I think that this year the major concern for reinsurers has been inflation on a macroeconomic basis. I think we've all experienced inflation in our own lives, and reinsurers are no different. They're seeing excessive claims inflation in some areas, and slightly less in others, and they're still waiting to see how much it will come through in other areas. Other concerns that they have seen is 2023 has been another year where there have been increased amounts of natural catastrophe experience. We've seen a lot of attritional weather events coming in the US, but also in Europe from Italy, from France, and the earthquakes in Turkey. All of those will be hitting the reinsurers' balance sheets. But we are seeing increased capacity come into the market in some areas, but to a limited extent, particularly off the back of a very hard 2023 renewal season, where in 2023 we saw reinsurance prices increase significantly.
Thanks, Peter. It's interesting to know what would be on the minds of some partners that we have to work very closely with as an insurer here at Covéa. Mark, just turning back to you for a moment. We know that Covéa has had a successful renewal for our 2024 programme. Could you talk a little bit about how this benefits Covéa?
Yeah, absolutely. So, as I said, reinsurance for us is about making sure the company is financially viable and sustainable going forward. And the best reinsurance renewal that we can achieve means that as we come to price our business, reinsurance clearly is a factor that we have to pass on to the end consumer. So the cheaper we can purchase our reinsurance for, ultimately, the better rates we can offer into the open market. And it's not just about price, it's about coverage as well. So as Pete said, in 2023, the reinsurance market from a catastrophe perspective was very, very hard. It's the hardest market for a number of years. It cost us more money, but also there was a contraction in coverage. And by contraction in coverage, I mean things like, on a catastrophe, it clearly rains and floods for a long period of time. There's a certain number of days or weeks that we're able to aggregate claims within to recover from reinsurers. Those claims windows tightened during 2023, but they're expanded back out again in 2024. All of this means that we, as an insurer, will necessarily retain less of that loss ourselves. Therefore, it costs us as a business less money. Therefore, our pricing becomes much more attractive to other people. So a successful renewal for us puts us in a position where, as an organisation, we are comfortable to be able to go out and deploy our capacity in the areas where we want it to.
Which is obviously helpful for us as we come into 2024. Thanks, Mark. And Peter, you touched a little bit on some of the challenges that reinsurers are facing and some of the events that might be happening outside of the UK and how that ultimately impacts the reinsurance position that UK insurers can have. Can you just explain that a little bit more? Why would floods in California ultimately have an effect on the reinsurance program that we can have here in the UK?
Sure. The reason why reinsurance in the UK is affected by capital events that are outside of the UK is because reinsurers are typically international. This does provide an element of diversification, which makes them more secure as a company and more attractive, therefore, as a reinsurer. However, reinsurers will only have one pot of capital or a buffer to protect themselves against losses. When you find that there are events in other parts of the world, that will tend to raise prices in that areas, and that pot of capital that reinsurers will have is more likely to be deployed in areas where the rates are stronger. So therefore, they have less capital to deploy in the UK, which results in the potential for reinsurers raising the prices in the UK because of simple supply and demand dynamics.
So it's something for us to be very mindful of when we're seeing these types of events, natural disasters or otherwise, in countries outside of the UK, which is probably something that not all of us think about when we're seeing these events on the news. Just finally, I'll come to both of you in turn. What would be the kind of key takeaway that you would want people to take from this discussion about reinsurance, so the partners that we work with? What would you want them to know or understand with respect to reinsurance as a result of listening to our conversation today? Mark, I'll come to you first.
It's a little known area. It's one of those back office functions typically that the brokers and ultimately the end policyholder know very little about. But actually, it's fundamentally its heart is relatively straightforward and simple. It is providing us as an insurance company with the same degree of protection that we provide to our policyholders. In the same way that we would hope that as brokers, as policyholders, they value us as an insurer in terms of the service we offer, we have a similar view for our reinsurers. It's really important for us that we don't just choose reinsurers that are offering necessarily the cheapest price, but actually those moments of truth where we have a claim, we want to be partnering with reinsurers that are around both financially at a point where we need to make the claim, but also are willing to partner with us and actually pay the claims, because as important as it is for a policyholder that we pay out on valid claims in good time, it's really important for us as an insurer that our reinsurers behave in a similar way. As much as our purpose is to be here for the worst and kind of protect people against the worst thing happening and put it right when it does, actually it's important that our reinsurers have a similar sort of mindset.
Thanks, Mark. And Peter, anything else that you think people watching this discussion today should be taking away about reinsurance or the reinsurance market?
I think for me, the key thing to understand is that the fact that there is a reinsurance market helps ensure the profitability and particularly for customers, the stability of the insurance companies that they're buying insurance from. It enables the insurers to take risks that they wouldn't actually be able to take on their own, such as motor, where unlimited motor is required as a result of the legislation within the UK. No individual insurer would want to take that on their own balance sheet, so they're able to pass that onto multinational reinsurers with much larger balance sheets to give the certainty of recovery from in the event of any significant large claim.
Excellent. Well, thank you both, Mark and Peter, for talking us through some of the intricacies of the reinsurance market. We appreciate you joining us today. And for those listening, just please keep in touch with the CovéaPod episodes, which more are being released in due time. Have a good day, everyone.